Stock Play of the Day Overtime is an educational program. Any statements made by Ally Invest employees are not intended to be or should be considered investment advice, a recommendation to buy, sell, or hold a security, or a recommendation to adopt an investment strategy.
Hello and welcome to the Stock Play of the Day Overtime. On Tuesday's Stock Play of the Day, we talked about PayPal. Today we'll discuss, did we score or did we fumble? Hello, everyone. My name is Brian Overby. I'm the Senior Options Analyst with Ally Invest. On Tuesday's Stock Play of the Day, we talked about PayPal, and we looked at a long call in PayPal. And on that long call, we went a little bit deeper in the money. We looked at going a little bit further out in time, and we were billing it as a FOMO trade, a fear of missing out. PayPal has had a good run up. They had an analyst meeting, which was actually yesterday, which was Thursday. And we wanted to be able to participate if we see some upward movement in PayPal. But PayPal's an expensive stock. So we also wanted to limit our risk as opposed to buying 100 shares outright. So we're going to have a lower cash outlay, a little bit limited risk in case there is some downside movement. And how do we do that? We buy an option contract as a surrogate for buying the stock outright. And that's what we talked about on Tuesday's Stock Play of the Day. So let's get right into it. Let's see what happened with PayPal over the week. What we're showing right now is a 15-minute chart in PayPal. We taped the Stock Play of the Day at noon Eastern time on Tuesday. So this was noon Eastern time on Tuesday, if you see my crosshairs on the screen. And since then, the stock has gone pretty much up. All day Tuesday, this would be the end of day trading on Tuesday. We had a little bit of a blip down on Wednesday, but then it bounced back strong and had a real good up move on, this would be in the morning on Thursday. Once again, a little bit of a drop down and then a real strong move at the end of the day, leading into where we're at right now with the underlying stock trading over around 296 at this point in time. So let's go over what we did with, first of all, the trade that we talked about, and we always consider it a paper trade. It's not meant to be a recommendation here on the Stock Play of the Day. But let's look at the trade that we initially talked about putting on, and then I'll give you one alternative that you might want to think about. But right now we see PayPal today is up $11.69, which is just over 4%. So having a good solid day today. We went out to the June expiration. Right now, there's 126 days remaining. This is the Ally Invest option chains, by the way. On the left-hand side, we have the calls. On the right-hand side, we have the puts. We bought a deeper in the money option contract because we're looking to buy this as a surrogate for buying the stock. So by going deeper in the money, you get more intrinsic value. It moves a little bit more like the stock, but there is more cash outlay. So we're billing this as if you were to buy 100 shares of stock, you would have to put up, let's say, $29,000 approximately, a little more than that. And if you were looking to buy the option, we were looking to buy it at around $52.25. So that would be $5,225. So that was our alternative to buying that stock outright. And this was the call option that we bought. So I'm going to click on this. That's going to highlight and put that in our Ally Invest option strategy workbench. And right now we see that it's trading at $65. So on Tuesday, when we were looking at it on our call, it was right around $52.25. Now at the midpoint, we're at $65.88. On the bid, we're $65.30. If we were going to close the trade out, even though we were kind of billing this as a more of a longer term hold, we did get a strong move up so far in the underlying stock. So if you were looking to get out, what you would do here in the Ally Invest option trading platform is you would click trade. You would run over here to the right rail and look at where the mid price is at. When we initially bought it, it was to open that position. Now what we have to do is click on this and click sell to close. The June 18th expiration, the same strike that we bought, of course, the 240 strike call option. And then we'd have to pick a limit price. Now, right now the market's at 64.30. We'd say, let's go Yeah, 64.30. So let's go somewhere close to the midpoint. We'll say 65.40, somewhere right there. That sounds good. So 65.40, we'd click preview order, and then we just send that order to the trading floor. And hopefully we would get filled. Whenever you send a limit order to the trading floor, though, there's no guarantee of a fill or an execution on your trade overall. So that trade would be up, a little bit more than $10 on that position over the last 3 or 4 days. All right, now, if you didn't want to sell, you could just stay the course and watch it closely, decide where you might want to get out at. But we also talked on the Tuesday stock play of the day about a leveraged call. Now, we were saying that we're looking for some upside, and we knew the meeting, there was going to be an important meeting on Thursday, an analyst meeting about PayPal. So we kind of wanted to ride it out for at least that meeting and see what happened. But if you were, now that you have a little bit of profit on the position, the stock has moved a little bit in the right direction for the forecast. One of the things you might want to think about doing is selling a shorter term call against that position. This would be similar to doing a covered call if you owned 100 shares of stock, but you don't own the stock, but you own something similar to it. We own a deep in the money, actually right now, 83 delta option contract. So it moves approximately about like 80% of the stock price movement. So once another way to say it is that if the stock goes up 1, we expect our option contract in theory to go up about 83 cents in that scenario. Okay, that's why we bill it as a fig leaf, is that it's very similar to a covered call, but it's not like owning 100 shares of stock. So we say you're kind of covered in that situation. So how would I go about executing, rolling this position into what would be considered a fig leaf? So if we go back to the option chains, when I'm doing a fig leaf, I ideally don't want to be assigned. When I do a covered call, I don't mind being assigned because I have 100 shares. You just take my 100 shares away from me. In this instance, I own an option contract, and I'm going to have to do something with that option contract if I get assigned on the short call. Now, I'm covered as far as the brokerage firm is concerned because I have the right to buy the stock at a lower price than the obligation to sell it at would be. But by saying that, I'm going to err to the side of I'm going to sell less time. I'm going to go a little bit further out in time because overall, we're not paying as much for the option as we would if we were buying the stock outright. So if we bring in a little bit less premium, that's okay because we didn't put up as much money as we would have if we bought the stock outright. So if we scroll down to start with and we look at the put side of the option contract that we bought, we see that we still have some decent volatility in PayPal, and we're paid by looking at the put. It gives us an approximation of the time value that we bought. So the time value, the approximate time value that we bought, we're going to call it somewhere around $8. So I'd like to whittle away at that over time. And because we have decent volatility in PayPal, we can go quite a bit out of the money and even very short term. So in this instance, if I look at the February 19th expiration, only 7 days away, and I go down and look at the 320 strike call option, which is quite a bit of, what is that, around 25 points away from where the underlying stock, we'll call it 24 points, make it a little bit more accurate. And we could sell that call option. And if I click twice over here in our checkboxes, it puts a sell in our overview, in our strategy overview. And we could sell that for about $1 right now, maybe 105 at the midpoint if you could get a real good fill on that position. So I'm bringing in $1, looking to knock down this $8.50 worth of time premium approximately. And over time, I would like to sell a few of these to try to whittle this away a little bit. So if I go down and look at our option strategy workbench, we see that if we legged into this position, this would be the new position. We would be long already the June 18th contract, 240 strike call, and we'd look to sell the short February 19th expiration, 320 strike call, and hopefully bring in about $1 on that position overall. All right. Now, if you do that, you want to make sure you set an alert at that 320 level. And when it gets there, you're going to have to do something. You're going to have to manage that position. Maybe close everything if you wanted to, or roll that position out in time. That's one way to try to avoid assignment. But since you don't own the underlying stock, you really don't want to be assigned overall if you're doing this strategy. All right, that's it for this edition of the Stock Play of the Day Overtime. Check out this Tuesday's edition of the Stock Play of the Day. To make sure you receive all the alerts, please click subscribe and ring the bell. And we'll see you next week. Thanks for coming, everyone.